Role of mutual funds. She says diversification. Because candidates from the definition I gave, I said that the money that is pooled, the money that is pooled from different investors, the collective investment is pooled from many investors to purchase diversified portfolio of stocks, bonds, and other securities. So diversification. Mutual funds pool money from numerous investors to invest in a diversified portfolio of stocks, bonds, and other financial assets. Do you understand? So a mutual fund is a fund, yes, but it will have a portfolio. Within that portfolio, you'll have shares, you'll have stocks, you'll have bonds, and you'll have derivatives and many other assets, financial assets. And that candidates diversification helps reduce risk compared to investing in individual securities. If you have money, candidates, you have an option of maybe buying shares of one company, or you can invest in these vehicles so that your money is invested in a diversified portfolio, and that reduces risk compared to just investing in one or individual securities. So by spreading investments across various assets, the impact of a single investment's poor performance is minimized. You understand? That's what we mean by diversification. That is the role of mutual funds. Vincent says reduction in transaction costs as there is less expenses. Horner says provision of tax benefits. I told you when answering these questions, please put down the point, then expound. So your explanation is okay. So you are talking about provides professional management. So the key words there are professional management. Number 2, according to Zainab, professional management. Now, the reason why I say you avoid writing paragraphs in explaining points, because here you've been asked, outline 4 roles. You can summarize a role in 2 words, professional management. One reason is that if you are going to sit for an exam, your exam will be marked by human beings. There are human beings who will be marking your exam. People, human beings. Some of them, majority of them are Kenyans. Okay? Your exams will be marked by maybe 99.99% people of Kenyan origin. Okay? So when you write a point that is this one, your answers become marker friendly. Marker friendly. It will be marked by human beings, and human beings, you understand, candidates, the nature of human beings. I don't need to explain to you the nature of human beings because you are one of them. Okay, you are one of them. You are cut out of the same cloth of those who will be marking. Right? You understand? Are you getting my point? If you're asked, Explain 4 reasons. List the reason in 2-3 words, then explain. Don't start explaining in a paragraph. When you start in a paragraph, the one who is marking, you give him a lot of work to look for the point in that paragraph. And some human beings are not patient. You understand? So try as much as you can to make your answers marker friendly. I think I've made my point. You've understood my point. All right? Yes. Vincent says there is transparency and uniformity of benefits. But before we come to that, there is this point on professional management. How do you explain it? Professional management. I think Zainab has explained it well, but just to expound on it, professional management. Mutual funds are managed by experienced professionals who conduct research, they analyze market trends, and make investment decisions on behalf of the investors. So that professional management allows individuals, especially those without the time or the expertise to manage investments, to benefit from expert knowledge and potentially achieve better returns. Okay? That is one role of mutual funds. There is that aspect of professional management because they are managed by professionals, investment professionals. We call them professional fund managers. Professional fund managers. Some of you, I know, in future you will be professional fund managers. After you've done your course, you may venture into finance and be managing some of these vehicles. You drive these vehicles, right? It's called mutual fund investment vehicle. Vincent says reduction in transaction costs as there is less expenses. He goes ahead to write there is transparency and uniformity of benefits. Okay. Sauda says liquidity. It's agreeing with the ML. Liquidity. So number 3, liquidity. Liquidity. This is liquidity in finance candidates is different from liquidity in science. Liquids, you see, there are substances that, like water, substances like petrol, like beer. Beer is a liquid. In finance, when we say liquid, we are referring to the ability of the investors to easily buy or sell their shares. Okay, we have liquidity ratios. Okay, liquid assets. So mutual funds offer a high degree of liquidity, meaning investors can easily buy or sell their shares on any business day. And that is done at what we call the net asset value of the fund. So if you've invested in this vehicle, you can easily sell your stocks or shares on any trading day, as opposed to other kind of investments where it takes time to convert the stocks or the bonds into cash. Do you understand? And that liquidity provides flexibility to investors, allowing them to access their money when needed. So if you have money and you want to invest in securities that will allow you to have your money back easily, then mutual funds is your preferable vehicle. You understand? liquidity. DML writes affordability and accessibility. Affordability and allows individuals with low initial investment. So the key word there is accessibility. Just say first of all, accessibility. 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 Mutual funds provide affordable way for small investors to access a wide range of financial markets and instruments that would be otherwise difficult to invest in individually, because it is a way of pooling money from many investors. Okay, many investors, a mutual fund pulls money from many investors into one vehicle, a collective investment. So DML is calling them low initial investment. Individuals with low initial investment will be able to do what? To invest in stocks that they would not have been able to access if they were to do it individually. So that is another role of mutual funds.